Hello everyone and welcome back to the channel, and I hope you guys are doing great. So we have entered the month of July and the Q1 earnings season for FY27 has already started. So the companies will have already started coming with updates and they'll start coming with the results. So I'll definitely keep you guys posted, but this video is not about that. So this video, as the title says, what every investor should do, when the earnings season starts. So over here, I'll talk about certain points that one should take care and, do things so that one can ignore the outside noise and concentrate only on the business, because right now we have so many news channels, newspapers, how to say, social media tapes, telegram channel, or WhatsApp channel. A lot of things are there, right? But the most important thing is, right, we need to learn to concentrate on the business, not on anything else. So like me, in case if you have invested in any of the companies in Indian stock market, right? So what you should do when the result starts coming out, right? So let's get into it. I've made out certain points so that I don't miss out in telling you. And if required, I'll go more into details, or otherwise it will be just a heading, right? So first point is, right, read the quarterly result, not just the headlines, right? So whenever the results come, just don't be happy with reading the first line on the template. Go ahead and read the whole quarterly results and understand from top to bottom. That is the first thing. Second thing is go through the investor presentation. So whenever the company releases the result, whether it is every quarter or every half yearly, right, they share their investor presentation. Go through the investor presentation, understand if something new is happening, get more into details, and go through everything, right? What the company is saying about the business, how business is going forward, what are the things that they are doing, right? It helps to get more details, right? Because sometimes, I don't know whether if you have read the financial statement, they're quite I wouldn't say boring, they're like quite simple, not that attractive. But in investor presentation, it's like a PPT kind of a thing, so it's much more colorful. So you go through it. I personally enjoy reading investor presentation more than the uh, just the plain results thing. I go through there and go through all the information. Then the third thing is, right, listen or read the con call transcript, right? That is one another important thing which I think many of I also used to miss it earlier, right? Which we should not do, right? Either attend the company's con call online here, because the reason why I suggest attending the con call online, especially for the companies if you're holding it, right, because you will be able to hear the management tone. See, we can go ahead and read the transcript later also, but that in that we cannot how to say, understand the management tone, whether they are confident, whether they are worried, or they are tense. We don't know that. But when we hear the call live, or even the audio recording, right, we can hear from the tone whether the management is confident, how they are speaking, how they are answering the question. That's very important, right? And this con call gives a lot of details. So make it a habit of listening, or attending the con call live, or reading the transcript. This is very, very important. One will not just learn about the companies, but they will understand about the market as a whole and understand a lot of things. Because when I was reviewing the Q4 results for FY26, right, because I've went through so many calls, attended so many con calls and listened to it, right, I could understand the geopolitical issues which was happening in the Middle East and how it is impacting certain businesses, how it is not impacting certain businesses at all, and what made it difference, right? And that helped to understand the business much more better. So that is one thing that needs to be done. The another thing is, right, check if your investment, how to say, thesis is still intact, right? See, whenever we decide to invest in a certain company, right, we make a list down of certain things. Okay, A, B, C is the reason why I'm investing, right? So after going through all these things, we need to check, okay, is this still continuing, or is there something changing? And accordingly, how to say, we need to take decision whether to hold it, whether to trim it, whether to sell it off completely. So that is also one other report. Another thing is, right, while going through the con call, right, we need to listen for the management guidance for FY27. I don't know whether if you would have, reviewed the results for Q4 FY26. Generally, at the end of every year, management gives guidance for the next year completely. And some companies might give the numbers, or they might just say certain things. So over here, right, we need to get the guidance from the management, right? The guidance for the revenue, the guidance for the profit, or where the margins are. In some cases, right, they might not give the exact number. Revenue might increase by 30% or 50% or something like that. they might give certain hints. Like for example, in KSH International, they did not give any specific number, but in Q4 FY26, they said they will grow at the same number which they grew last year. So automatically you can translate it to around 60 to 64%. Some companies might say, okay, volume growth would be around 15% and the value growth would be around 10%. So we can add that up and down would be around 20 to 25%, right? So it's not just about the numbers, it's about understanding how the management is saying. And in some cases, there are certain management which will not give any guidance. So you have to just see the results, understand it, and see what you are expecting for the company to grow. Are they, are they growing in the same way? Then obviously the new thing is, right, track if they are, if they are getting new customers, they are launching new product, the capacity is getting expanded, or the order book is increasing. So obviously it all depends from industry to industry, type of business, right? Capacity expansion works for, is important for companies who are in manufacturing. Order book is for companies, who are into B2B, and they do manufacturing as per the orders that they receive. New customers are for, I mean, I would give an example of any companies where they depend upon new customers to come in for order for the revenue to increase, whether they are attracting new customers or not. In some cases, new products are being launched or not. Like for example, in Aeroflex, right, they launched a new product called as liquid cooling, which helped them, increase their overall sales and everything. So we need to track all those things. Then the other thing is, right, we need to look whether the return on capital employed, how to say, return on equity, are they improving or not, or are they going in the wrong direction? That is also one important thing, right? The your sales might be good, the profit might look okay, but what is happening with the return on capital employed, return on equity? That is also very important to keep an eye on it. In case if it is going up, obviously it's very well and good. In case if it is going down, one need to ask the question, why is it going down? Is it because of something unexpected which happened, or is it something really wrong with the business? So that is also very important. Then another important thing, right, while the result season is ongoing now, ignore the short term prices fluctuation in the market. It will keep on happening. One, I would suggest, how to ignore yourself from the price. Don't let your decision be based on the price. I have made mistakes earlier where I have taken decision not on the basis of business, but because of the prices moving up or down. And at the back of it, I have made some mistakes. So this is, I'm telling from my own, from my own learning and what I've experienced. Ignore the, ignore what is happening with the price of the share, whether it is going up or down, nothing. All we need to concentrate is what is happening with the business. If everything is going right with the business and as expected, when we did our analysis and we went ahead with the investment, then ignore the price movement, because at the end of the day, the market will reward the company which is doing good. Another important thing, right? In case after the result, let's say you invested in a company A, right? And at that time you were like, okay, I am not that confident, but I think the company can do well. So I invested only a small portion of the amount. And I'll see, okay, I'll track the company, I'll see how the company is doing, and I will see, and I will wait for the other results and other update to see how things are going on. So in such cases, right, once the results are coming as expected and things are getting better, and if our conviction is increasing, one need to increase their position. Obviously, how much to increase, how much should be it should be the person of the portfolio. It all depends from person to person. Some people like to concentrate the portfolio. Some people like to keep a good growing diversified portfolio. So it all depends on people. But if your conviction increases, one should reward the execution of the business. That is very simple. Don't look for companies which are not doing that great and the PE is coming down, and you think that it is getting cheaper and you want to invest more. Please don't get into that. I mean, the recent example I would give is the, I think it's the KPIT stock, right? Where it almost is down by 50%. It was down by 10 or 20%. People thought, oh, it is cheaper. Then it went another 10%. People might have thought it is cheaper, but it's still getting cheaper and cheaper. So don't ignore the prices. Ignore what is happening with the stock, and don't look at low P. Look at the business, how the business is doing. And if the business is executing, and earlier you had started with a small amount, keep rewarding it and make it in big. And obviously, how much big one wants to make, it all depends from people to people, portfolio to portfolio, and the risk appetite of the business. Then another thing is in how conviction increases is the opposite side. It's when the conviction reduces. Let's say you were once we were very bullish on a company, and over the period we increase the allocation in that business. But now when the result came, okay, and the way things are progressing in the company, in the industry, we are not confident, or we are like, okay, things are not going as expected. In such cases, if you don't want to reduce the position, or if you don't want to trim the position or sell it off completely, at least one thing we should do is should not add on to it. See, whenever you are not, one is not confident if the business is going in the right direction, the most important thing one should do is should not add more money to that business. One should keep it on. Personally, if you ask me, if things are really not going that great, depending upon the condition and the reduction in conversion, one should at least reduce the position or trim the position and put the money in other companies which are doing well. At least, it's a humble request. Please do not add more money to such situation. It will always go in the wrong direction. So that is one thing. And the last thing, okay, think independently and don't invest on the media or the social tips and then take your investment. Okay, you went on the social media, you read certain thing, fine, but don't take your decision on the basis of that. One should go ahead, open the result, read the investor presentation, go through the con call, go through the management guidance, see how things are going on, and then take the decision. Because the thing is, if one invests depending upon the tape or what the social media says, right? We don't know when their opinion will change. Then what one will do, right? And that's why a lot of people get into trouble, right? So over here, the Q1 FY20 season has started, right? And one question in the end we should ask, right? Okay, is the business getting stronger and better and better? If the answer is yes, that means the business is in a good position. And depending upon the allocation, if one wants to increase, they can keep on adding into it. But in case if the business is getting weaker and weaker, right? Please, I would request once again, do not add to that position. At least you don't want to trim it, you don't want to reduce it, you don't want to sell it off. It's fine. But at least do not add to the position. Wait and see how things progresses. That is all I wanted to say. So wish you all the best in all the companies that you guys would have invested. Keep tracking the companies, listen to the companies' documents, the investor presentation to the management. Keep out all the noises, especially news channels, because they are biased and they have their own agenda. So please don't listen to them. In social media also, there are good people and there are a lot of bad people also. So you need to be careful. Even if you listen to certain things, please go and check on your own, get your own conviction, and then take the decision. I hope this video finds you well. And if you like this video, please do hit like and subscribe to my channel. Thank you and God bless you.